But if the market breaks structure down here, we're going to have plenty of opportunity to come back down there and then buy back in from the lows. That will probably be the next week, so the second week of August. Good morning and good afternoon to you all. It's Max Norbury here from the UTC. Probably surprising many of you with this video in the first place, as I will likely be abroad in Germany by the time you guys are catching up on this week's market report breakdown. But I wanted to put this together for you before I left so that you guys still had that level of understanding about where we are in the week in terms of the macro theme, and of course providing you with some top tier trading analysis for some particular assets across the week as well. Also, of course, covering all of the major econ events and just giving you guys the heads up that you need whilst you are trading in the financial markets. So hope you're all doing well, and I hope you're having a good morning so far. I will likely be either on the aircraft at this time or likely landed and traveling to Europa, where I'm going to be thrown around at 1,000,000 miles per hour on some crazy roller coasters with the kids. Can't wait. But anyway, let's get moving on. So in terms of last week's trading performance team, it was absolutely extraordinary for maybe the second or third week running. We absolutely nailed it in July. And considering we still have a few days of July left throughout the course of this trading week, which obviously I'm not going to be around for, it's just been absolutely phenomenal. I think this month in total, I actually don't have the figures right in front of me at the moment, but I do believe we're well over the 20% net return point for July so far. I can actually pull up the MT5 and just confirm that. Just give me a moment. So whilst I'm pulling that up, yes, we do have a big week this week in terms of what's occurring. Obviously on Friday, it's the first Friday of the month, so we have our non-farm payroll data amongst the rest of the US employment data. But we also have a big week for interest rate decisions as well. We have the Fed interest rate decision, which is the big one. We also have several others which are going to be causing some various moods of volatility throughout the week that you guys are going to soon be well aware of and hopefully prepared for. So just coming back to the net return for this month, July is going to close out for us at the UTCF at 26.74% in terms of the net return. Incredible trading performance from us here at the UTCF, and I know a lot of you guys inside the trading room have been doing really, really well for yourselves as well. Of course, it's not come without its frustrations in various forms, but we've still done pretty damn well. Last week's return at 7.52% was extraordinary as well, and it just really brings home that theme that we've been looking at over the last sort of 3 weeks of July especially, which has just been excelling. It's just been really, really good. Now, in terms of the weekly in terms of the portfolio breakdown, in terms of exposure, last week saw pretty balanced exposure across Forex and indices, 44% FX, 46% indices, and we actually finished off the exposure with 10% in commodities last week. Now, breaking it down in terms of the day-to-day gains, Monday started out relatively good. We had a 0.68% day. Tuesday, we breached the 1%. We actually got a 1.5% return on Tuesday. Wednesday was phenomenal. We actually did a record, not just a record-breaking week, but a record-breaking day. We've never done. I don't know where the last one was, so I can't quote that. I don't actually know what the last record-breaking day was, but we did 4.29% on the Wednesday. I mean, this is incredible. And also, please, for those of you who are out there at the moment on YouTube and you're looking at this and you're obviously looking at your your main big time gangster traders racking up 20 to 30% in a day, that's great. But remember, it's all relative down to risk. And if you're making 20 to 30% on a day, the likelihood is you're probably going to survive no longer than a couple of months where you blow your account because of over leveraging. We did this on 0.25%. It's a foolproof risk strategy. If you follow the risk parameters properly, you're essentially protected utterly in the financial markets. You're never going to necessarily blow an account because the law of large numbers. You cannot lose that many trades in a row without a single win to keep you up. So to do that, 4.29% based on 0.25% trades, again, just absolutely brilliant. Going into Thursday, then we tie up the major weekly gains, and that was like I think maybe a 1.3 or 1.2% gain. And then we did have a little bit of a drawdown day on Friday. Thursday was actually better, but some of the losses on Thursday bled into Friday as well. So we did a losing day on Friday, 0.5% down, and we also took a loss on the Thursday at a 0.25% trade there as well. And that really tied it in. So then going down to portfolio metrics, we have officially breached 100% net return for this year so far. Obviously, we're still in July. We're heading into August. We're currently at 104.5%, which is a monthly average of basically 15% per month of this year and 3.9% every single week since we started. Now, we have had drawdown week. We have had months where we saw very little returns or very mediocre returns. I know June, we did 6% return in June. I think there was March or April time. We had a very low month as well, maybe 4 or 5%. But yeah, we obviously we've done incredibly well throughout July, and that's pushed us up over the 100% point to 104.5% so far. So really looking very good on that front. We did have a slight reduction in the total risk reward over the portfolio this year as well. We were sitting at 2.9 and now we're sitting at 2.7. So that's a slight reduction there. In terms of trading volume throughout July, obviously this is closed off now. We were bearish significantly more than bullish in July across the various asset classes, which I find really surprising, actually. We've always been slightly more bullish, as you can see here from the backlog of data. We've always been slightly more bullish than bearish across the asset classes. Don't know what happened with July, but we were shorting a lot more than we were longing. So that's interesting to see that one. And then finally, compare funds with the industry averages down here. The S&P had a bullish week at 1.82. The UK FTSE surprisingly came in with a 2.06% bullish week, and then we basically wiped the floor with both of those indices. So that was that. So moving down into the market trends and opportunities, then we of course have our weekly stocks, FX, energies, and metal expectations. There's some pretty difficult ones to call this week, but I still think we've put together a pretty killer format for you guys to follow throughout the week. So we are looking first of all the UK FTSE coming back down to retest liquidity with a bullish continuation with trend. So that's the first one. I won't go into this obviously too much, guys. I know you'll be reading it and you'll be digging into it yourself. So I won't, I'm just not just going to reel off what I've said here and regurgitate it. So you guys can help yourselves to that one and download your copy of the report inside the trading room. In terms of the Euro NZD range continuation at the moment, we are still trading within that 15-minute channel. There is the possibility of a rejection of the median for price action to come back down to the lower liquidity limit, right? And that's this area in here. So possible price rejection, back down to liquidity, and then up from there. That is one of the plausible outcomes. But at this moment in time, I would stay with the channel that we're in at the moment. It's a really nice one, well established, and I think we probably get a couple of bullish runs in that one back up to that sort of, what number is that? 190, what was it? 196.50? Yeah, 196.50 for the long. So that's that. If we go down here, then natural gas. I've listed this one again just after the incredible bearish run that we called last week. It is coming to liquidity. It does look like it's building up for the next leg, but we could have a delay. Remember that this is the bottom of a sort of potential range. It's definitely an inflection point, but it's not the primary inflection point, which is down here. So we might have the case where natural gas actually sells off a little bit more first and then goes for it. We're not going to get trapped into this one. I am long natural gas in terms of an actual trade. I've got a little bit of exposure in it at the moment. But if the market breaks structure down here, we're going to have plenty of opportunity to come back down there and then buy back in from the lows. That will probably be the next week, so the second week of August, where we consider buying back into that one if the first one is a failed attempt. So we'll have to wait and see, where that one really lands over the course of the next 72 hours, I would say. And then finally tying it up with gold. Now gold at the moment, it's been a very choppy ride. We have been building for the next leg of the move in here at the moment. It's testing major pivot zones down here. Obviously, the median of the range is in the middle, of course. It's testing those sort of medians at the moment. We are at the point now where we may see the buy back to the previous highs or the run back down to the lows before we see that rejection and that previous high retested yet again. I've listed here some of my thoughts. Obviously, this one in particular, safe haven flows may strengthen if the geopolitical risk in the Middle East escalates. That is happening behind the scenes. We also have a very tentative situation going on at the moment with the trade wars. Yes, okay, we are looking at resolutions taking place and taking fold on those, but it's not pretty. It's not smooth. So there's going to be some backlash from that, possibly. There's going to be some renegs going on, reconsiderations. We also have a president at the moment who likes to U-turn on everything. So there's a lot of inherent risk, and that the gold market at the moment, the chart that you're looking at, is really representative of the lack of confidence ultimately in the US dollar. And the market is sitting on gold, waiting to see what the dollar's next move is going to be, and in terms of whether to flood their money back into the gold and keep it safe, or start to really get bullish on dollar and ultimately, see where that goes ahead of time. So that's where we're sitting at the moment with gold. Now, in terms of the broad market challenges, or actually, no, technically speaking, the not broad market challenges down here, this week in terms of what I've tried to put together is a basket of opportunities that is least affected by everything going on, which we're going to come to in a moment. There is a ton of stuff this week happening, and I've tried to pick 4 assets that are going to be least affected by this, obviously with the exception of gold. Now, in terms of those 4, the Fed interest rate decision is coming in at a whopping 9 out of 10. So that's a really big one. So please be aware of the Fed interest rate decision when it takes place and try to limit your market exposure at all costs. And then, of course, the Friday US employment data, which essentially means non-farm wage growth, average hourly earnings, and unemployment, so on and so forth, the whole group of US employment data. And that's coming in at just 1 point lower than the Fed interest rate decision. So we've got 2 huge points of time, this week, where we could seriously see some market volatility that could really flip the charts on their heads. So just be aware of both of those points in time and try, again, as I said, to limit your market exposure as best you can. Now, come down here, we've got the state structure volatility index. Volatility looking pretty high across the board, I would say, this time around, guys. UK FTSE at 42.11%, that's quite high. Euro NZD also quite high. The VIX is actually quite low. That's a low number for the VIX. Natural gas, 62.77%, and gold at 59. Both of those very notable call-outs. Not too fussed about the first 3. The last 2, natural gas and gold, be aware. There's a lot of potential money and volatility flowing in these 2 assets at the moment. We could potentially see some really big breakouts this week, especially when we're taking into consideration the Fed interest rate decision and, of course, the US employment data on Friday. So that is a great segue into the Economic and Order Book Impact Report. So this week, team, lots going on. The BOC interest rate decision, Fed interest rate, BOJ interest rate decision, US core PCE price index, US wage growth, average earnings, and non-farm payrolls. A ton of data out this week. Now, a lot of it's less impactful than others, but this is the impact scale, which measures broad market impact. So even if the BOJ interest rate decision is only measuring as a 2 out of 10, it's still going to cause some kind of volatility as per the model that this is generated from. So we've got a 3 out of 10 for the BOC interest rate decision. We've got the Fed interest rate decision at a 9 out of 10. The BOJ at a 2 out of 10. Core PCE price index is measuring a 4 out of 10. US wage growth 3. average earnings 5, and non-farm payrolls at an 8. So this is actually the measuring less than the Fed interest rate decision this week, which is going to be the big one according to the model. So please look at this, go over to your economic calendars, source what the dates are, the explicit days and times, keep that in your minds so that you can look to measure your exposure at those points in time as well. Try to keep it reduced. If your trades are going into profit, have a bit of management ability about you, bring in the stop losses if you've got the margin there to cover it, and just try to be safe. Try to be safe throughout the week. It's going to be a bit of a minefield out there. As we go down, of course, we got the impact gauge here, 65% at the moment on FX, which is the impact scale. Basically, everything that we see here, what's it most going to affect? FX is what it's most going to affect. Over here to the money flow trends, buy side versus sell side interest. Not really anything notable, I would say, in over and above of what we had last week. So indices have fallen ever so slightly to 59.9, currencies 46.7%, which is, I would say, pretty low at the moment. But the indices are 59.9. There's still quite a lot of buying interest there, so probably looking more long than short, I would say, from that indication. As we go down into our equities, we've got a really nice basket of equities this week, team. So please feel free to go and dig into those. My top spotlight equity of the week this week is AFC Energy. Growing global attention on clean energy solutions in the EU accelerating its hydrogen infrastructure rollouts. AFC is poised for upside. You can read the rest in the report itself, but that's essentially my main reasoning here. I'm loving renewable energy at the moment, really getting invested into it, not just money wise but also intellectually. I'm definitely studying the sector. It's a really interesting one for me, and I'm quite passionate about that subject in itself, and this does actually look like a really nice investment opportunity, probably for maybe 2 to 4 weeks. I would say a turnaround on that one, so a nice sort of month rotation. So please feel free to go and check that one out as well. And that's about it, I would say, team. Obviously, institutional buying interest by sectors over here. But you can use that as you see fit. But that's about it. So that's ultimately all I can offer in terms of an explicit market report breakdown, team. Apart from that, obviously, the charts are shut down. I am providing this session to you in the middle of a Sunday afternoon at 2 p.m. GMT. So again, as I said, I won't actually be around in the real time. All I can do at this stage is urge you guys to be safe this week. It's going to be very volatile, lots of news events going on. We also have the Middle East situation continuing to unfold. We have the trade developments continuing to unfold. There's a lot going on in the mix. So it's a lot of plates to spin. I'm not expecting of every single one of you to be able to spin all the plates simultaneously. That's fine, but be aware. It's not about having a deeper understanding of all these things at the moment. It's just about being aware of them and being able to appropriately protect your accounts. So when the events are taking place, minimize risk, take the risk out of the market, watch your exposure, and take it step by step. Hopefully this report, video and breakdown, and the report itself is going to have some kind of positive impact to you guys out there this week. I hope you appreciate it, and I look forward to catching up with you soon enough. Now, for those of you who are inside the trading room, I will of course be in and out of the trading room throughout the week. I'll say hi, drop a message in, maybe send a picture. And if you are on YouTube, what are you doing still on YouTube? Please feel free to come and join the community. You can sign up as a free UTC Basic member. There are no strings or no catches. Join in the fun, get into the UTC Basic tier plan, and you can download your report for free. There are no strings attached, so please feel free to do so. So team, have a great week. Good luck out there. I will be back on Friday. Hopefully I'm intending to provide a live NFP trading event on Friday. It will be the first day back after, I actually would have landed that morning, so I might be a bit groggy, might be a bit tired, but we'll see how it goes and take it from there. So take care, guys. Have a great trading week as always. Good luck out there, and I look forward to catching up with you soon enough. See you then, team. Bye-bye.